guys, so welcome for part two. We're going to look at some of the price action that we've been seeing in the markets lately. Okay, so this is the S&P 500, so this is just the broader market. Of course, this is a very blended look at the stock market, and you can see we're about 12% down from the highs that we saw in December, okay? So there we are, about 13%, okay? So I believe we're heading much, much lower. And that's what it's definitely looking like. Once you cross below this blue line, same thing for the bullish case, right? For when it's heading in the up direction. When you cross this 200-day moving average, you're golden. When you break it, you're in dangerous territory. And that's what it's looking like. We're definitely hitting a recession. Everyone's kind of anticipating it. It's likely going to happen. I would say 90% chance. So now, of course, this is going to hit crypto, and it already has been. Let's get rid of some of this stuff. Got it. Okay. So now this is, obviously Bitcoin over years, and we're likely going to be coming down to this kind of $28,000 range, which is pretty cool because that's, definitely a lot further down from what it is, and that's just based on Fibonacci extensions. So it's got these little support levels. So if the market keeps dumping, which again that's what we're anticipating, then you can guarantee that Bitcoin's probably going to likely want to try and hold this 36 area, but then kind of break down and come down to here. Okay, could even come down to 18 potentially. I think that's kind of a far drop. I don't think we'll see it get to that point, but you never know. So anyway. That's what we're looking at for right now. So if you go, sorry, this thing's kind of spazzing. There we go. So if you go back and we do a comparison, okay, as to where the S&P kind of applies. So it's very highly correlated to what the stock market is doing, okay, Bitcoin and cryptocurrency. So you can see right here, of course, it drops, about 50% right here when the market dropped as well. And then even going back, like what was the lows of this last cycle? So like January 2019 was the lows. And look, that lines up exactly with the broader stock market, okay? Same thing with this big peak here when everyone was freaking out, rushing to buy Bitcoin back in 2017, stock market was just going bananas. It always correlates, okay? And so we can obviously see that there's going to be another correlation. Same thing, kind of, and it's a leading trend, by the way. So when crypto starts breaking down or breaking up, stock market's going to be right behind it, lagging. Okay, you can see here, the crypto market started crashing in November, and about a month later, then there goes the stock market. Okay, so how do we know this? How do we know that we're likely going to see more downside in the stock market? Well, let's take a look at one of the best indicators, and that is going to be with the 2 and the 10-year Treasury. Okay, so what this is doing is we're looking at the bond market, and if you've heard a lot of financial investors, as many as I've researched into on YouTube, they always say that you can always kind of predict things by the bond market. You're not predicting, but you're putting probabilities in your favor. Okay, so what this is showing is when you're up here in this region on the curve, it's saying that your economy is primed for growth, okay? When you're down here and this is inverting, the inverted yield curve, okay, you can kind of Google that, look a little bit more into it, you're at a risk point, okay? So now I've marked here each time the yield curve inverts and heads up like that, and you can see in, the past, 20, 30 years, done that a few times. We could even go further back and look at some other times, but we're going to look at the most recent ones. So let's take a look at the S&P chart. This is right here in blue, the S&P. And you can see, bam, look at this. Look how perfectly this lines up. Yield curve inverts, stocks tumble. Yield curve inverts, stocks tumble. Even for COVID, right? Yield curve inverts, stocks tumble. And here we are again, yield curve inverting, stocks are starting to tumble. Okay, so we can assume that we've got further downside on this. There's a lot of things that are not looking so good for the stock market. I'm going to pull up some other stuff. So this is Here's another chart that shows. Okay, sorry about that, guys. I didn't have the chart ready. So this chart is showing real earnings of S&P 500 companies. And you can see here, because inflation is hitting so hard, this is where we're at. We're at basically a negative real earning. And you can see here, there's, of course, all these different times in history where it happened, right? So the dot-com bubble, which was in 2000, the great financial crisis, 2007, 2008, and right now, 2022. So that's another bad sign. We can go on and on and on. We've got this food shortage. Oil prices are going through the roof, squeezing out the consumer. The consumer is spending less. You know, Disney Plus is getting hit. Netflix is getting hit. People have less money to spend. The economy is going to hurt. Okay, people lost their businesses during COVID. All kinds of different things. The market's going down. Again, this is going to be an amazing buying opportunity in a very, very small market, aka the crypto market, that is poised for massive growth. Okay. So I'll do some updates along the way. This is kind of where we're at right now. Again, you know, I've dove deep, saving you the time, saving you the research to know about this stuff. But don't take my word for it. Definitely check it out and, you know, research for yourself a little bit. So anyway, that's what we got for part 2. I'll have some further updates along the way. Definitely check out some of my links down below. If you want free crypto, jump onto the BlockFi credit card. You know, of course, don't go into debt, but just use it for your daily bills. You'll accumulate crypto just with your rewards. Easiest way to get it through BlockFi and some other sources down below. So definitely check them out. Catch you guys next time.